Bitcoin just opened the new week below the 50% Fibonacci level. Ethereum broke its rising trend line and is trading under key support. And gold, the one asset that's supposed to hold, is losing momentum too. This week's opening setup is one of the weakest we've seen in months. Here's exactly what the levels are and what you need to watch. This video is for educational and entertainment purposes only. Nothing here is financial advice. Always do your own research before investing. Let me give you the full picture before we get into individual assets, because the context this week matters more than usual. We're opening a new week with selling pressure across the board. Bitcoin and Ethereum both closed last week in technically damaged positions. Gold is trying to hold a key support, but hasn't found the momentum to push higher. There is no asset in this analysis that's giving a clean, bullish signal right now. And that's important to acknowledge before anything else. The theme for this week is simple. Support levels will define everything. The market isn't in free fall, but it's walking a tightrope above some significant floors. If those floors hold, relief bounces are possible. If they break, we go meaningfully lower and the conversation changes entirely. Volatility is expected to be elevated in the early days of this week. That means sharp moves, noisy price action, and a lot of false signals. The discipline this week is watching daily closes, not hourly candles, to determine what's actually happening. Let's break it down, starting with Bitcoin. And the weekly open has confirmed what last week's close was warning us about. Price has lost the 50% Fibonacci support at $74,000. That's the level that had been holding as a reference point, and it's now flipped to resistance. The RSI is sitting at 32. That's close to oversold on the weekly time frame, but not there yet. Selling pressure is ongoing and there's no clear exhaustion signal in the data. The trend indicator is pointing down, and this is the nuance that matters, price is now approaching a genuinely significant support area. This isn't random chart space. The $71,800 to $69,200 zone is where the next real structural defense needs to happen. The levels that matter this week: support $71,800 first, then $69,200. These are your two lines in the sand. $71,800 is the immediate test. If buyers show up there with volume, a relief bounce back towards $74,000 to $76,000 becomes the near-term scenario. $69,200 is the deeper floor. And if we get daily closes below $71,800, that's where this heads next. Resistance above $74,000, then $76,000. Both of these are now overhead resistance. Reclaiming $74,000 on a daily close would be the first sign that the selling wave is exhausting. Until that happens, those levels cap any recovery. The 5-day scenario, two paths. Path 1, $71,800 holds. Buyers defend the level, we see a relief bounce, and the $74,000 to $76,000 range gets tested again by mid-week. This is the scenario where last week's weakness becomes a buying opportunity for patient traders. Path 2, daily closes below $71,800. This is the scenario where selling deepens and $69,200 comes into play quickly. At that point, the market structure has deteriorated significantly, and the $70,000 psychological level becomes a major test. Right now, the probability-weighted view is a bearish weekly open, with the outcome determined by how $71,800 behaves in the first 2 to 3 days. Ethereum's setup heading into this week is, if anything, more technically concerning than Bitcoin's. Two things happened last week that matter. The rising trend line was broken to the downside. That's a structural breakdown, not just a support test. And price is now trading below $2,062 support. When you lose both a trend line and a support level in the same week, the technical picture is clearly negative. RSI at 33 confirms weak momentum, and ETH continues to underperform Bitcoin, which in a falling market means it falls faster and recovers slower. The critical levels for this week: support $1,938 first, then $1,900. These are meaningful levels. $1,938 has acted as support before and is the first real floor below current price. $1,900 is a psychological number that carries its own weight. Resistance. $2,063 is the immediate ceiling, followed by $2,140. Reclaiming $2,063 on a daily close is the minimum requirement for the bearish pressure to ease. Until that happens, the bias remains down. 5-day outlook. The new week opens with a cautious and negative tone for ETH. Without a recovery above $2,063, selling pressure is likely to continue. If $1,938 holds, short-term bounce attempts are possible. If it breaks, $1,900 is the next target, and at that point, the conversation shifts to how much further this goes. The fundamental picture reinforces the technical weakness. Bitcoin dominance is rising. Capital isn't rotating into altcoins or ETH, and there's no near-term catalyst visible that would change that dynamic quickly. Gold is the most balanced of the three. But even here, the picture has softened compared to recent weeks. Price is consolidating around $4,500. The general trend has weakened, and RSI at 40 means momentum hasn't built in either direction. The $4,466 support is holding for now, but it's being tested, and the conviction behind that hold isn't particularly strong. Key levels: support $4,466 first, then $4,301. The gap between those two levels is significant. A clean break of $4,466 doesn't have much cushion before $4,300 comes into view. Resistance: $4,539, then $4,640. Getting back above $4,539 this week would be a positive sign and could trigger a recovery attempt toward $4,640. 5-day outlook: sideways to slightly negative opening is the base case. If $4,466 holds, a recovery toward $4,540 and above is possible by midweek. If that support breaks, selling toward $4,300 accelerates. What this means for crypto: gold isn't providing the strong safe haven signal that would suggest extreme market stress, but it's also not turning risk on. It's in a wait-and-see posture which mirrors the broader market mood exactly. Let me connect the chart data to what's actually happening beneath the surface. The macro backdrop is the primary driver right now. We're in an environment of persistent rate uncertainty, ongoing geopolitical tension, and a global risk appetite that is firmly in defensive mode. That combination is a headwind for crypto, full stop. It doesn't mean prices can't bounce, but it does mean that any bounce needs to fight against a macro current that's flowing the other way. On-chain data is showing some interesting tension. Long-term holders are largely not selling. The coins being moved at a loss are predominantly shorter-term wallets, which suggests this is more of a short-term trader washout than a structural distribution by long-term believers. That's a nuanced but important distinction. Capitulation from weak hands can actually set up recoveries, but it needs to complete before the bottom is in. ETF flows remain the key institutional signal. Another week of net outflows or near flat flows means institutional money is not stepping in aggressively at these levels. Yet, the $69,000 to $71,000 zone is likely where we'd start to see more meaningful institutional accumulation activity if we get there. Bitcoin dominance continues to rise, which explains ETH's underperformance and the lack of altcoin strength. Capital consolidating into Bitcoin in a risk-off environment is a classic pattern. It typically precedes either a broader market recovery led by Bitcoin or a final flush where even BTC can't hold before a real bottom forms. The direction of this week, and potentially the next 2 to 3 weeks, hinges almost entirely on whether $71,800 in BTC holds on a daily closing basis. That's the number. Here's the summary for the week ahead. Bitcoin opened below $74,000 and is heading toward a critical $71,800 to $69,200 support zone. That zone needs to hold, or the downside opens up significantly. Ethereum is more structurally damaged and needs $2,063 back before it stops being a concern. Gold is neutral, waiting, not leading. The entire week's direction comes down to one thing: how the support levels behave on daily closes. Intraday noise will be high. Don't react to every candle. Watch the daily closes. That's where the real information is. My approach this week: cash preservation, defined levels, and zero forcing of trades. The market will tell you when it's ready. Your job is to be positioned when it does, not to guess before it happens. If this weekly open breakdown is useful to you, subscribe and hit the bell. I cover every major open and close with this level of detail. No hype, no narratives, just the levels that matter. Like the video if it helped, and drop your BTC target for this week in the comments. Stay disciplined. See you in the next one.